Hey guys, so in this video, what we want to do is we want to go over the main products that we're seeing in our marketplace so you can effectively talk to clients that you have on the phone so we can hopefully convert an application as well as convert them to a closing at the end of the day. So what I've done here is I put together the main products that we are going to see in our marketplace, and also I have an illustration of a down payment assistance loan below. Now, you don't need to know these things perfectly. What we want you to do is have a good general knowledge base so you can talk knowledgeably to people on the phone. So let's get started here. So the main products you're going to see in our marketplace are what we call a conventional loan, which is backed by Fannie Mae or Freddie Mac. You have an FHA loan, you have a VA loan, you have a down payment assistance loan, and you have a USDA loan. So let's just go over all these kind of quickly here. Okay, a conventional loan is a loan that's backed by Fannie Mae or Freddie Mac. Okay, now with a conventional loan, you need a 620 credit score to qualify for that loan. And then if you're a first-time home buyer, you only have to put 3% down on the house. If you're not a first-time home buyer, you have to put 5% down on the house. Okay, so a conventional loan doesn't require anything crazy. It's just basically the main type of loan. It's the most popular loan in the country. Okay, now with an FHA loan is a government insured loan. Okay, now in a normal market, you need a minimum of 580 credit score. Due to COVID right now, they're raising the standards at Fairway Corporate to 620. Okay, with an FHA loan, you need a minimum of 3.5% down. The down payments are important to have a good knowledge of, because that's usually the barrier of entry that we see when people are trying to buy. Okay, now a VA loan, normal market 580 minimum credit score, in COVID 620. A VA loan is a loan that's specifically for active duty or veterans, and they actually do not have to put they don't have to put anything down, they put 0% down. Okay, a down payment assistance loan, which is very popular in Arizona, and they also have them in some of the other states that we're in. Since we don't do a ton of business there, we're not super knowledgeable on those, so I'm going to basically go over the Arizona requirements. You need a 640 credit score. We're going to go over an example of how one works, but with the correct concessions from a real estate agent, we can actually get your down payment to 0. Now they still, even if we get your down payment to 0, you do have to do an earnest money deposit when you buy a house. It's like a good faith deposit, where if we get your cash to 0, you can actually get that refunded to you at closing. And then most homeowners are always going to get a home inspection, which is an inspector going out to the house and just basically listing everything wrong with the house, so the consumer is knowledgeable on if they want to buy the house, if there's anything wrong that they can't see just by looking at it. Okay, a USDA loan is specifically for rural areas. You have to be in a USDA area to qualify for a USDA loan, and it's basically the government's way of promoting development in rural areas. Okay, so in a normal market, it's 580 credit score, in COVID 620, and it's 0% down. Now, one thing before we get into the down payment assistance loan is when we say 3.5% down, 3.5% down, 0% down, 0% down, okay, that's the minimum down payment. So for example, if you were doing a 3.5% down on a $100,000 purchase, 3.5% is $3,500. That's the minimum down. Okay, now you're almost always going to have closing costs and prepaids, which take that number higher. Okay, so that's really important to remember, because sometimes people think 3.5% down, that's all they're going to need. In almost all cases, they need more than that. Okay, so just an FYI. Now, I did a really quick description of a down payment assistance loan just so you get a feel for how it works. And this is the main ones we see in our marketplace are Home Plus and Home in 5. Okay, so on this one, we have a purchase price of $200,000. Now, most of the time when we're doing a down payment assistance loan, we're actually utilizing conventional or FHA loans on the first mortgage, and the down payment assistance is actually what we call a silent second mortgage. Okay, so for this example, we have a $200,000 purchase price, and I'm doing a 97% loan to value first mortgage, which means they're basically putting 3% down before the second mortgage is added. Okay, 3% down on a $200,000 purchase price would be a conventional mortgage at $194,000. Okay, so that the customer would still be responsible before we add the down payment assistance of $6,000 for down payment, and any closing costs and prepaids are added on top of that. Okay, now how down payment assistance works is you have certain percentages of down payment assistance that you can take. It's usually from 0, 1%, 2%, 3%, 4%, 5%. The more down payment assistance you take, the higher the rate is on the first mortgage, but it allows you to get into the house with less money down. Okay, now most of the time when someone's using down payment assistance, they're going to max out the down payment assistance because they don't have a lot of money to bring to the table to close on the house. That's normally why people use them. Now, just an FYI, a little tangent here, but down payment assistance rates are typically higher than a regular conventional loan. Okay, so on this option, we have a $194,000 first, and I'm doing a 5% down payment assistance. Okay, the 5% is actually off the loan amount, not the purchase. So in this situation, we would have a $9,700 second. Now, what a second mortgage is, you have a first mortgage and a second mortgage on your title. Okay, now the special thing about down payment assistance is this second mortgage has a 0% interest rate. There's no payment on this loan. And it actually disappears by 1/36 every single month you're in the loan until it completely disappears after 36 months, which is 3 years. Okay, so it's basically like a product that's trying to help people get into home ownership where down payment and funds are a problem for them to actually buy. Okay, so it actually goes away after 3 years. There's no interest and no payment. So we have a $194,000 first. We have a $9,700 second. Okay, if you add up those figures, you have $2,037, and we are buying a house for $200,000. So the down payment assistance bridges that $6,000 gap, and then you have an additional $3,700 that you have towards closing costs. Now, the closing costs on down payment assistance loans are pretty heavy. So typically, even when we're doing this, there's going to be around $3,000 to $4,000 to the table that the buyer is going to be responsible for to bring to the table. Okay, now sometimes what we do is if the buyer has very low funds, we work with the real estate agent and ask the seller for concessions. And a seller can actually grant our buyer concessions. In this situation, if they gave us $4,000 in concessions, the buyer would actually not bring any money to the table, and they'd actually get their earnest money refunded to them at closing. Okay, so we can structure these with the realtor, and the loan officer is often talking to the realtor to structure these deals in order to get the down payment where we need it for the customer to qualify. Now, down payment, just an FYI, almost all products allow what's called a gift for a down payment. And a gift is almost always a family member. Sometimes you can get a friend, but it's kind of difficult, so it's almost always has to be a family member. And a family member can basically give the buyer money, and they actually have to write a letter stating that we're giving them this money without expectation to ever be repaid. Okay, so that's how a gift works. Okay, so you have conventional FHA, VA down payment assistance, and USDA. Now, if you're talking to a client on the phone and their credit scores are lower than what we have here, keep in mind, consumers a lot of times try to improve their credit on their own, and it's like trying to go to the gym on your own without a trainer. Okay, all of our loan officers are super well qualified to coach your client or coach the client to get where they want to be so they can buy a house. Okay, and we have a number of tools that they can utilize as well. Fairway has what we call Credit Tool, and what Credit Tool is free credit optimization. What free credit optimization is we have a credit professional review the client's credit report and actually put together a plan for them to get to a credit score that we think we need to qualify them for a home loan. Okay, and that's a free service that we offer the borrower. Okay, we also have what if scenario and rapid rescore technology. Okay, and this is typically when someone's pretty close to qualifying, but they just need a little bit higher score. Okay, what if scenario, we can actually run scenarios on your credit report and say, if you pay down this account to this level, what's it going to do to your credit score? And it's very accurate. And once they do it, as long as they do it within 30 days, we can order what's called a rapid rescore and automatically push their credit to the level we want it to, which is really important because when you pay things off on regular credit and you let it change organically, it usually takes 2 to 3 months before it really is going to affect your credit where we want it to. So we have rapid rescore and what if scenario. Some of our loan officers also use agencies called rent reporters or credit rent boosts. These are companies that can add rental history onto a credit report. And if you've been on time or if you've been renting for a number of years and you don't have good credit because you just don't have a lot of credit, but you've always rented and paid your rent on time, we can actually put that on your credit report, which will boost your credit and sometimes help you qualify. So those are the main things we do and coach the clients to get to a certain level. Now, when a loan officer works with a client that really is serious about buying but isn't there yet, it's really their job to put together a plan to get them there. Even if we can't help them right this second, it's about getting them there eventually. And that really creates loyal clients to us and loyal partners from our real estate agents. So that's all I have for you guys today. Hope you have a great day, and we will talk to you soon.